Winners in India's chemical sector are going to come from 5 major trends, and the fifth is truly magnificent. The first is the obvious, the China Plus One and CDMO play, where my top bet is PI Industries. It is the undisputed leader in custom synthesis and manufacturing for global agrochemical and pharma innovators. They don't just supply chemicals, they're an R&D extension for their clients. With over 5 decades of relationships with global innovators and zero conflict track record, they have a sticky business model. Their current pipeline of over 60 molecules, many in advanced stages, ensures revenue visibility for the next decade. By 2026, their diversification into life sciences and electronic chemicals will be in full swing, reducing their dependence on seasonal agro cycles. Currently in the 4th year of consolidation and available at a 30% correction from the top, PI Industries is a blind bet for the long-term investor. As a trader, I would go in long at about 3,000 with a 2-month horizon, but a very strict stop loss. But of course, I can't recommend entry and exit prices. We can always have a discussion in one of my live upcoming events. The second is green chemistry and sustainability. Now, what is green chemistry? It is designing chemical products and processes to reduce or eliminate hazardous substances. For example, companies like NatureWorks use microorganisms to turn cornstarch into compostable plastic resins for food containers and water bottles. In India, Clean Science and Technology uses the vapor phase catalytic ethoxylation process to reduce toxic waste and increase its margins. A video in green chemistry will be out soon where I will discuss these processes in greater detail. What's important today though is that Clean Sciences is a principles first engineering company. Instead of traditional waste-heavy chemical processes, they use technology that is cleaner and perhaps more importantly, significantly cheaper. That is why their EBITDA margins of nearly 44% are nearly double the industry average because their processes require fewer steps, less energy, and generate almost no waste. As global regulations like Europe's carbon border taxes tighten by 2030, Clean Sciences eco-friendly manufacturing will become the preferred global standard, giving them a massive pricing advantage. It is available at about half its listing price while trading at cheaper valuations than most of its peers. With a relatively small exposure to America at 17%, this might be the perfect time to buy into this stock for at least 1 to 2 year horizon. For import substitution and intermediates depth, Deepak Nitrite wins out. It is known as the backbone of Indian intermediates. Deepak Nitrite has perfected the art of backward integration. They take basic raw materials like phenol or acetone and move them up the value chain into high purity advanced intermediates. Their products would then be used by giants like Reliance, HUL and L'Oreal to create the products we see in our supermarkets. For example, there is no Sunsilk without Deepak Nitrite or Lifebuoy or Dove. Deepak Nitrite is also targeting a 10,000 to 11,000 crore capex expansion by FY28, focused on replacing 5,000 crore worth of annual imports in segments like polycarbonates. Polycarbonates uses range from safety equipment of goggles, helmets, bulletproof glasses to electronics like phone cases, CDs, DVDs and circuit boards, to as far as construction where we have skylights, machine guards, signages and greenhouses, and even automotive parts like headlamp lenses, car roofs, etc. By owning the entire chain, Deepak Nitrite would also protect itself from raw material price shocks that typically crush smaller competitors. It is also making an entry into photolithography chemicals, which are essential for semiconductor fabs and battery chemicals for EVs. This is expected to bear fruit by 2027. To know more about other semiconductor stocks, you can watch this video. Talking about the EV batteries and semiconductor sector, Gujarat Fluorochemicals is another winner. GFL is the only Indian player with a fully integrated fluoropolymer value chain, essentially for EV battery binders and semiconductor manufacturing. Through their subsidiary GFCL EV Products, they have secured massive investments, including some from International Finance Corporation, to build India's first integrated battery materials facility. In 10 years, they aim to supply 50% of the cost of a battery, which is electrolytes, salts and binders. As India aims for a 35 to 40% EV penetration by 2030, GFL is effectively a toll booth for the entire domestic EV ecosystem. But the biggest change in the chemical sector is coming from a growth trend that seems totally unrelated on the surface. See, now competitive advantage in the chemical sector is shifting from who has the biggest plant to who has the smartest data. Digital transformation and industrial AI are no longer optional experiments. They are the primary tools for protecting margins in a volatile global market. For example, companies are now creating digital twins, which is a virtual 3D replica of a physical chemical plant that uses real-time sensor data to predict outcomes. It basically allows engineers to test what-if scenarios like changing pressure or raw material purity in a virtual environment before making changes in the real plant. This prevents costly downtime and accidental explosions while finding new ways to increase yield or profitability. Tata Chemicals is the benchmark for digital transformation within chemicals in India. Their Mithapur plant uses AI-driven digital twins for carbonation towers and high-pressure boilers. As a result, they have already reported savings of around $600,000 annually just from energy and yield optimization. As they scale this across their global facilities, their operational efficiency will far outpace generic competitors. They famously reduced a specific chemical reaction time from 48 hours down to just 3 minutes. Amy Organics then is the smart small cap. While big players focus on plants, Amy Organics is focusing on digital supply chain and CRM. They recently integrated advanced digital tools to track specialized pharmaceutical intermediates across their global client base. At their new Ankleshwar facility, the company has implemented a distributed control system. This is effectively a smart plant where AI algorithms monitor temperature, pressure, and chemical flows in real time. If a deviation occurs, the system corrects itself without human intervention. This ensures 100% batch consistency. In the pharma world, even a 0.1% variation in quality can lead to a rejected batch. Amy's autonomous setup eliminates human error, giving them an unparalleled quality moat. This digitalization allows them to be a preferred partner for global pharma giants who demand 100% traceability and real-time compliance, a high barrier to entry for smaller manual chemical firms.